Hi there, Thiago, and welcome to Puro Benefits Channel. Today we're carrying out one live pleasure to share my thoughts with you guys. Before starting, before moving to the screen, I'd like to tell something new that from last Monday, December 5th, I will launch a Sunday Thursday around our mission that does not have YouTube delay, so there we can size, maybe can avoid misleading, watching and trading. So I think it would be a good opportunity for us to join and for you to join and watch during almost all the session with the to launch. I'm making a quick trial during all practically all the month of December. From December 5th to December 21st. Take a break from 22. So in this 15 days, you'll be able to join, test, and to see if it's suitable for you. Because for me, style, day trading is all about style and which something that works for one does not work for the other. So the intention of this a bit longer free trial is to let you take your conclusions instead of I become I state I state 30 many words, 30 many things to you. You reach your so in the description of the video there is the link to subscribe, and I will let you in the right in the chat my email. So any doubts, any questions, anything you need to clarify before joining us there, please drop me an email and I will be happy to answer your question. Okay, so I will come again to the subject during the transmission since many people come and go during the audience change during the session. So let's change to the screen and start preparing our day. Okay. 30 seconds. 30 seconds for the opening. Yesterday we had an important session. We had the Powell's Powell's speech that excited market during the after. So if we come to our charts, we just open. Let's see what markets will try to draw. But before, I'd like to show this chart that I just that I prepared some days or some weeks ago. And this possible third touch in the long term downtrend line here, traced from January 2022. This cross here would be around 4120, and it's a strong. It seems to be a strong low trend line, and even though we are too close, the 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 strong move we've seen yesterday put prices actually too close to it. So in theory, it could be broken out, but I don't know. I prefer to see, and we need to avoid getting biased. We need to avoid getting biased, but it's it's possible that prices face some resistance there. Okay, above this blue line here is the Fibonacci. Is a Fibonacci that it's around 4183. Okay, then it's been we have many weeks, 4 weeks that we had the high close to it, and actually it's something I'm definitely looking at. Okay, so my curious currently is about the 120 and 183 here. We've seen that yesterday we just touched it. We touched it again, the 20 weeks exponential moving average here. That tends to be an important support when trading above it. And when we come to the daily chart, we see here that yesterday we not only respected the 3942, that was actually an important region, but we practically touched this uptrend line, the bottom of the uptrend channel. So uh, in theory, we could be actually heading upwards. And in this case, in the case of this channel, in a couple of days, its top would be in 42, or 42, 10, 42.30, let's say. And but considering we have this low trend line before and the Fibonacci at 4183, I'm actually not sure. I would say that it's more likely that it would be more likely to face those regions as resistance and maybe trying to pull back before moving up, then going straight through the region. But I'm always trying to avoid to get biased. Then let's see what we can expect. Other thing that in this my daily chart grabs my attention is this unbalanced volume here. I really like is one of the indicators I really like to see, to try to identify divergence and possible reversals. And we had 12 days practically here moving sideways in when indecision, 12 days of indecision from market. And in this period, the unbalanced volume was also flat. This is something I do not like to see before a breakout, because we have we could have different scenarios here. The same lateralization with this unbalanced volume in an uptrend that we could call an accumulation, or the same situation with a downtrend line that we could call distribution. So if we see a lateralization with an accumulation here with increasing volume balance, we could be more trustful about the breakout. But when we see this way, it's not that, for me personally, it's not that trustful. So anyway, I would expect, I do not anticipate, I do not try to anticipate anything. I just react, but I would not, I would wait. I actually would wait to see what market is going to draw today. So as we can try something. Just positioning here the value area. Coming to 15 minutes, we've seen that during the night, it traded practically sideways. We see that moving average, 15 minutes moving average is flat. Now it's trying to we have the value area high at 48.7. We are a bit above it, and it's kind of lacking some conviction to actually break out the 4100. So let's see the coming this latest candles marketing decision here after the close of the indicators. We have this huge candle here. Then after it, some indecision candles, and let's see if it's going to be able to trade above it or below it. Remembering that on 10 a.m. you have the ISM PMI that usually that is also important and is not unusual to bring some volatility when disclosed. So let's see if where we're going to trade. Let's see where it's going to be the volume. Yesterday, even though the hike was right in the last 2 hours of the session, with prices made two clear regions of negotiation. You could say here from 42 30 to 42 and 64 to 87, 88. Then moving down, these would the regions I would consider as potential supports, even though yesterday was a shift of trading region that when it takes place, I prefer to wait and see market developments. But considering the huge volume we had yesterday on them, I think that we obviously should not anticipate anything, but I think that we could look at them. Okay, an interesting yesterday that we see the duality we faced. The most traded points were 39.50 and 40.76. So we see that before data release and after how things changed, we traded more than 100 points above what's actually too much to move. Moving 100 points needs and to move it and to be able to remain there, to keep it, to hold it there, hold price in the region it moved, it's actually shows strength, shows strength. Then let's see if what's coming on. We can see here we're completing 11 minutes of session, and price did not trade below 40.88. That means even with some price of sellers, it's not been easy to put price down. So market continues strong. This kind of situation, such as yesterday, is not unusual to have a pullback on the other day. You have a strong move that you think that, oh, it's strong, now we're in a trend, and the other day, market gives back almost all the rise and make a huge correction, but it's not what we're seeing. Even considering that the openings are volatile, we're seeing just 10 points of range here. What actually is not that much. So it shows that possibly that the market mood would would be got better actually, and maybe we're changing level we're going to trade. But let's see both if it's going to be able to work above the 15-minute moving average, and also here the 2 and 5 minutes moving average. 5 minute is here at 40.68. 15 minute is closer, the moving average is closer, because in the 15 minutes I prefer to use all the night session. I use all the available data. But in smaller time frames, in shorter time frames, I prefer to use the regular trading hours. So we see this huge difference in my chart in terms of 5 and 15 minutes moving average. During the day, I actually prefer to use the 2 and 5 minutes, but actually take 15 minutes into consideration. It's, it's we can many times we can find something interesting to do around it. Yeah, we see here this range. It's filling up. We have a the range is consolidating for this beginning of the session. Let's see where it's going to. The volumetric bars here reflects this struggle. This let's see if it's let's see if we're going to see an exhaustion here. So far, what we are seeing, what we've been seeing, is that what we've been seeing is that both we are seeing aggressions from both sides. We're seeing aggressions from both sides. Now, buyers are trying to be more aggressive. Here, they're trying to break out the top of the congestion. Buyers, uh, sellers are absorbing, but they are trying. We should need, actually here, we should need to see, to become more likely a breakout, we should start seeing seller's aggression and absorption on this left column. I'm always telling about absorptions, aggressions. Not sure whether it's clear for you guys. So when I see this, for example, this 407 here, it means that it's been traded 407 contracts where sellers sold at the bid price or market price here, at market here in the 40.9575, okay, 495.75. So here, sellers were responsible to actually close the trade. Buyers were passive at the bid. The opposite, the opposite is the same, but the contrary you find when we see the green here, for example, the 723, this side. It means that buyers were aggressive. Buyers took the offer at the 4096.25 here. Sellers were at the ask. Sellers had contracts here at the ask price, and buyers took at market or took it at the ask. So this is actually important because it shows who was responsible to close the deal, to close the trade. And this is meaningful. This is meaningful. Here we're starting to from this is something I like to kind of the kind of structure I like. The volume profile here is trying to configure something I like. It's abruptly we have 30,000. You see here, 3085 contracts, 23, 20, and then it abruptly reduced the amount. I like this kind of formation because it shows that there is actually resistance over there. And if we come down, actually the same here. We have 20, 2305, 1889, 1480, then 300. This abrupt ends, this abrupt finish or reductions, I actually like to see and usually like to trade. But what we're seeing is that look at here in this volumetric bars. Buyers are actually being aggressive. They're actually being aggressive, but uh, sellers are absorbing. It's been finding, it's been defense, it's been found here. Now sellers sold and buyers absorbed here. This is a sign of strength from buyers, and usually when you see a breakout, usually you see this configuration here. It does not mean that every time this happens, a breakout will take place. But anytime you see this, anytime you see a breakout, you've seen this before. But here, look at the exhaustion here. In this situation, sometimes things can turn back because we've seen here 300, 112. This is what we call exhaustion. You've just seen, and now markets absorbing here. So it's not unusual in that situation to see, if we see a weak breakout, it's not unusual to see a pullback. But as I've been telling before, when you see this kind of absorption from buyers, this increase the likelihood of a success of the success, increase the likelihood for a successful breakout. And it what was happened here. the 4100, it would be obviously uh, at least a temporary barrier, because this is actually like the other regions finish in 0, 0, 0. They always act as a psychological barrier, and market is always looking at them. And so uh, it would be actually expected to face some difficult to overcome the region. But we see here that, let's take here the 2 minute. We are since 9:42, market established a strong uptrend. They headed down, tried two times to be. Let me position my, just a second, sorry. For two times, it tried to reach the value area high with a low at 488.75, 48 in these two candles. But after that, that was right in the limit of the range, the down end, the down end of the range. And after that, it's the fact of not even capable to reach the value area high already means that it means strength. That is, we're not able to pull prices down. And after that, assuming the uptrend, clear uptrend, actually confirms the strength. Let's see whether how long or to where it's going to be able to move. In this way, in this sense, it's hard to think about selling or to making any to make it in making any counter trend trade. It's we seen the strong move of yesterday, this session opening this way. So let's see if we're 6 minutes from 10 a.m., 6 minutes from the ISM PMI to be released. So let's see whether it's going to cause any impact. But just remembering about this point here, I just put this circle here to mark some couple of days or a week ago. But this point, my curiosity is about this 4120, that in this precise, we have a clear and precise low trend line here that's currently around 4120. Yesterday's close was actually too close, but I'm wondering if market will be strong enough to trade or to overcome it. And as I told in the beginning of the session, this blue line here, I'm also consider. I'm also curious about. This is the Fibonacci from March 20 to January 22. This is also important and has already been respected for at least 4 weeks. Here, this is the Fibonacci here. It's been respected both as support and resistance. And Fibonacci I take as reference, because actually, especially these long-term ones, If it reaches 20, 30 points, you can actually think that it's uh, it's been reached. It's not that precise, but it delimits a bit broader region. But 120 and 180 are my curiosities in the coming sessions. It's we're too close. It's actually for the coming sessions. And this year, was it a high or not? The same. By the time of the release of the economic figure this morning, price made a high at 4105.75, 4105.75, and now it's trying to overcome that. Let's see if it's going to succeed, because if it fails, would be a first sign of potential pullback at least. We should see lots of selling pressure to start thinking about a possible reversal. But we're seeing that even trading close to the high, buyers are still have appetite. Sellers are trying to sellers are pressing up, sellers are selling. Uh, Too much sellers aggression here. You see all these contracts were closed through, or in all these transactions here in the left, sellers were the responsible. Right here, this business, these trades were closed with buyers at bid, sellers hitting the bid. Okay, so we're seeing a lot of absorption here, lots of absorption. It's starting to create another range here. We overcame the 98, that time 99, and then started trading this one. As I was as I was saying, it's difficult to think in counter trend. Any counter trend. Now we're seeing sellers more aggressive. Let's see whether they're going to be able to push price, for example, till 98. This would mean the return, the entrance to this previous range, 10-point range here. So when it happens, in this case, it breaking out. We've seen a breakout of a range. It moved up, start to make another range, and then move it down. When entering the previous range, most times it comes that, oh, we are close now. You see the liquidity. I was forgetting, but liquidity reminded me. There is an indicator right now. ISM PMI. It really gets crazy. Let's see how long will it take to how long will it take to get things calmer. Let's wait a bit. You cannot infer anything in this kind of situation, and think about doing anything, it would be even worse. So better to wait, drink of water. Look at the size of the candle. was from 90 to 110. But we found, we see that there were no that conviction to come below to trade below the previous low, no? 490 here. Even in such a volatile scenario, let's respect this one. In the up end, price quickly moved up. But here in the low end, in the down end, low end, and we're seeing here, we're seeing absorption. Sellers are pressing, but buyers absorbing. This actually confirms that market market remains strong. After that craziness from the first seconds or first minute, the buyers absorbing all the sellers' activity here. In such a condition means that possibly we could test the up end of the region again. And then we should see how it would behave there if we could see sellers active there again and being able to absorb all this buyer strength, this buyer appetite, or if buyers could make a breakout again. Let's say I'd say that the 98 here could be the first 98, 88.5 would be our first reference in terms of seeing if the trend, because for example here, okay, buyers absorbed here, but if they're not even able to push price to 98, means that even with appetite, sellers could be winning, would be start to win this this battle, at least temporarily. Let's see whether look at here. Look at here at the 2 minute. We I didn't see, but the we just touched the very high. Obviously, we would not do. I would not do anything, but this kind of strong reference, even in such a crazy conditions, many times it works. Sometimes you get tempted to try to leave some limit order, but according to the Murphy's law, you can see 10 times working, but in the first you try to do something, you certainly lose. So better to avoid this bad sensation. What we're seeing here, we in this at the release, we lost the moving average. It touched here. Let's see the context. Né? As I always say, I like to say, tape reading or order flow it's not a picture. It's all about a story. We need to know the context. So what we've seen is that after the indicator, there was a breakout and a quick turn back, a quick reversal to a test in the very high, and then we crossed it down the moving average. The next candle, we tried to break out the moving average, but unsuccessful. And in the other one, we just touch it. This means that it's been weak. It's getting weaker than before. So facing difficulties to reach or to overcome this moving average, this for me is a sign to start thinking about a short. But nothing it depends on the place. Huh? But for example here, the high of this candle is 40 94.5 here. 94.5. Not being able to overcome it now. It's a signal that an exhaustion above it could be an opportunity to sell. But here we see here the view up. It is 35 minutes. We could start considering the view up. It's in 40.95. So it's another region that could be seen. 94.5, 94.95. So this region from 4 to 5 could be interesting, even though this is right in the middle of the range. I don't feel comfortable in doing something in this middle of the range since there's a lot of contracts in many levels and price could quickly move to any of them. So in theory, if I sell here in 95, in theory, my stop would be at least here around the 100 because price could shake here in this within the range. So for me, it's not comfortable to if I even seen here in this kind after indicators. I'm not comfortable, but this is the trade I like to make, and this generally leads to many points. This generally this reversal trading above the moving average, then lose the average, it's difficult to overcome it, and then come down again. This is something I like. Let's see what's going to. Here we're just in the we're too close to the value area. Let's see if it's going to enter again here the 90 because the same I've mentioned before regarding the top of the region is valid for this button. If it reaches here and turns back, okay. But if it enters this old range, this previous range, then it's more likely that it succeeds in moving up at least a bit than to try to make a counter trend here and make a wait for a pullback. Entering this new range many times mean or most of times mean continuity within this range. Let me just take a look on 5 minutes. I forgot it. Okay, let's see here. 80. We have the 5 minute moving average on 40.79. Let's see if we're going to reach the region. Let's see if it's going to stop before 81. Sorry, I've had peak in my internet. Now it's established. Let's see, it reached here the 82. Let's see if it's going to stop there or if it's going to test the. It's usually difficult to see passing through this moving average, but as I've mentioned, what about other? Let's see if it will be an exhaustion here. Kind of, but I could not say that's actually one here. They're pushing down. So, as I was saying, it's you cannot do. We cannot anticipate this kind of thing, but this kind of trade. But it's possible that after trading 6 points below the average, it's possible that if we start seeing lots of absorption here and buying absorption in upper levels, then buyers aggressions, this could be a potential trade. But we're seeing this pressure and it passed it through. Then this is interesting to show that always and ever we hardly can use this word here because if we try to use it, it's impossible. Then this is why I like the order flow to see here to check or to see here because when you see the chart, only the chart, I feel kind of being blind because after I started reading the tape or seeing the volumetric bars, I see the chart. I like to see long-term charts, or I like to see the chart to make me to give me the reference. But in terms of decision, I cannot at all take any decision without seeing something here, such as here. We've seen the exhaustion right on the 70, lots of absorption here from buyer's absorption. So this time would start a kind of a small correction. But when you see only the chart, you cannot see that is actually behind it. Here we are seeing actually the candle formation, and but here we are seeing after that beginning, actually the selling pressure increased hugely. Look at this. After losing, you see the very very high was actually a support. Price tried to move up, failed to overcome the moving average, and then move it down. By the time I've told that this is the kind of trade I like, and today it shows it have worked. It touched the very very high, failed to overcome the moving average, and then came down again. This this shows the probability. Then you see that the chart gives me the clues, and the order flows gives me the timing. Because if I get, it's impossible for me to stay looking only at this crazy numbers here. Because you start seeing absorptions, exhaustion everywhere. The times I've tried to trade only based on flow, it was not that good. Sometimes I try, and it's more successful if I look the ranges in volume at price and here, because as I've mentioned, the volume at price actually gives me the ranges and it let me clear, it gets me clear the limits of the region. So these regions, the volumetric bars are still okay, but this is why I defend the mix of both techniques. I think that using both, being able to use both, you can improve. You can bring efficiency to your trading style, to your trading strategy. You can bring more confidence, not necessarily certainty. Certainty is a tough word because we can mislead, but when you use both, you can. I think the foundations for your decisions are you have more subsides to your decision making process. Trying to resume this way. I've thought about the 64. This is a region that has been important yesterday for the 64. Let's see whether it's going to respect. Just let me check here. Yeah, let's see whether it's going to respect uh, or if it's going to pass through. We've seen a small exhaustion, but when we are such in a strong trend, it's hard to be looking for exhaustions. You should be actually a process, two, three, four, five levels of decreasing volume and a very low volume in the last one to be able to name it uh, an exhaustion. Huh? But as this region was a reference yesterday, it could be expected that today it could work. Let's see here if you see here that sellers put pressure, buyers are trying to defend, but sellers actually were active and absorbed buyers. Let's see if it's going to. There was 18 here, and after an aggression, their aggressions are being small, but buyers are absorbing. Let's see. Let's see if it's going to. Uh, this I would say that this would be the first that could be actually respected. Let's see. But we're seeing that it's been hard to reach the 6. Yeah, but to say it was actually respected, we should see at least coming to 70, 71. Does not mean that it would be needed to be immediately, but what I mean is that it's not enough. So far, it's not enough to say it was respected. Every time I talk about a point, we're talking actually about a region of 2 or 3 points above or below, because it's less than 0.1 or percent or less than it. So it's hard to be right in the point. So, for example, we've mentioned 64 and it reached 62. It's we could consider that region was preliminary respected, but what we're seeing is that strong selling move. This is the third candle here, 2 minutes. The third candle that players are not able to push below the 62.5. Let's see if there it was a breakout here, and let's see if it's going to succeed. If it's small or there is an exhaustion, it could move up again. I know, but it's after such a move yesterday. Today we could expect for such a correction, and as I've written in the pre-market studies, it's hard to. Okay, we should every day we should write our points, take our notes, but in this kind of session, in the day after of an important session like yesterday, it's hard to take those points that seriously. We have should take them as as reference, but in days like this, their relevance could get reduced. Let's see here. This let's see the 5 minutes here again. 475. For example, here we have the 2 minute moving average here at 40.79. Okay. In this sense, if we see price moving here, moving upwards again, and failing to trade above it, it would be a signal that actually sellers are stronger and we are having a weak market turned a bit weak. And let's see, now the 64 is actually being a resistance. It's actually being a resistance. Did you see it? It tried 3 times to go there. I was looking at here the region for a potential pullback, but what we're seeing is that they're struggling to overcome 64, but not being able. It's not succeeding. But actually, in this scenario, I would have tried a short here, but in this meantime, or after it started falling, started dropping, it'd be difficult because I could get stopped quickly, easily, and it would be terrible. Now, what I would expect, or I would wait, it would be to reach again the moving average. Moving average. Then, trying many times and failing there, I could think again about selling, but not now. Not now. It seems that we're starting to form another range here, but you see, price sellers actually are strong. Sorry. Let's see. Let's see whether it's going to be able to overcome the 64 again. It's trying to overcome the 64, but it's been again a barrier. We are not seeing buyers. We are not seeing buyers absorption. Sellers are not being aggressive. In theory, this could lead to a short, but it's buyers are aggressive here. They are making aggressions. Sellers were absorbing. I think it's going to fail here. No. No, now we start seeing these absorptions here. This buying absorption means that this could be, you could see here a breakout again. But like always, it does not mean it will, but it could. Okay. If it's actually hard to remain this difficulty to overcome 66, could show that it's actually a point. This could mean that it's actually forming a resistance. But as I've mentioned before, I don't like this kind of formation here. It's kind of Fuji mountain, not a table mountain. So this gradual decrease here is not that good too. I do not like it. Let's see if so let's see. You see it actually failed to overcome the top on 66. You see, and in this scenario, it's impossible to think in doing anything here in the bottom because there this in this in this region in this direction breakout could take place. In 4050 we had also a previous stop uh, some some days ago when we had like here on November 15th I had the stop on 4050.75. So after the PMI It's been after the PMI. The market got excited with Powell yesterday. With this morning indicators, it remained strong. But if we see here at 10 a.m., 12 for me, it's where things changed. When things changed and market, things there just move it down. And it's only in that region here from 66 to 60 that it tried to take a rest or to take a breath, but it failed. We're seeing again sellers putting pressure and sellers putting pressure and buyers absorbing here. We start seeing after many candles, many big candles here, we've seen kind of volatile lateralization here, and coming to the volumetric bars, we see this selling pressure, but buyers absorbing. In this sense, this could be a possible try. Buyers try to reverse, but this is not enough for us to think in doing something. Let's see if an exhaustion, no, exhaustion, no. I'm just trying to, there's no exhaustion here. When moving down, there's no exhaustion. Sellers have tons of contracts and are selling. Buyers absorbed and sellers keep selling. We're seeing here from 65 this time, they're trying but failing. This year, 1500, 1100. Let's see. Buyers are trying. The imbalance, the green color, on the right column shows that the green color shows when the buyers were stronger than sellers. Okay, guys, just finishing. We passed the one hour. I've mentioned in the beginning of the transmission, from December 5th, we'll start daily transmission using the Zoom platform. There will be together for around 1.5 hours, starting 10 minutes from 10 minutes before the opening to discuss our pre-market studies, pointing out these regions that I talk during the session. So we make a warm up, and then for 1.5 hours we can keep together here, saying looking at the flow in real time. Since Zoom in YouTube we have 10 to 15 seconds delay, but in Zoom it's a real time, and so it's better. It can avoid misleading you, or if you're trading there, or well, it's better to have the in the same page. And I'm also foreseeing a weekly Q&A session. So my objective is making kind of a course. It will be live transmissions, but not only live transmissions. You've been seeing that I share all my knowledge here. I show what I'm seeing, my thoughts, or I keep on narrating. And this is actually a course. Huh? This is like an on-the-job training. So these Q&A sessions we can do maybe even during the with market open, but not seeing the screen. The objective is just to clarify things, to teach concepts, order flow concepts. That my objective here is to introduce the order flow concepts for technical or chart traders, traders that are not used to. So hope you enjoy. You have until December, from 5th December to 21st December. There will be a free trial. So I'd be glad to see you there. It's free and you can cancel the subscription anytime. So if you cancel, you will not be billed in January. Billing would be only after January 6th. So cancel before that, you would not be billed. Then I think that this trial much better than I spend your time here explaining and trying to convince you. Much better is you to try that. So if you are watching this, hope you watch right after the release. It's going to air, but here in the description I have the link to the page where you can subscribe. My website link in 2 days will also be here, so you can find me there. And my email, any doubts, or I know that it's difficult to, maybe it's difficult for you to decide, or it's missing, if it's missing some information that it's, of course, it can be missing, just drop me an email. I will be glad to explain you and provide you all subsides to help you making your decision. Okay? Thank you so much. Thanks for watching. If you did not do it yet, please leave your like. It helps our channel, and hope you have a good session. Okay? Thanks. Bye.